Thank you. Good evening. I would like to welcome you all to our Set the Tax Levy meeting for the 23-24 school year. Noting that all board members are here as well as administrative staff that we need. I need approval of the agenda.
So moved.
Second. All in favor say aye.
Aye.
I have not received any public comments. Anybody have any? All right. So we will launch into the budget approval and going over all the final numbers. Allie, are you starting?
Yes, I am.
Okay.
Okay. So back in July, the third draft of the budget was approved by the school board. But since then, we've received some updates and we're able to update for the fourth and final draft of the budget, so I'll go over those updates tonight. Some of the new information that we've received is the third Friday in September student count. The count came in at 4406 and we had an estimate of 4423 in the third draft of the budget. We have our summer school FTE count in and that was at 173. We've also received the final numbers for open enrollment in and out students. We have our October 15th state equalization aid certification, which was $24.6 million. We have the finalization of the 23-24 revenue limit worksheet. On there, transfer of service came in at $538,000, and then we had total non-recurring exemptions coming in at $134,000. We also got final grant allocations, and this includes carryover balances from prior years. Some of the budget changes in Fund 10 for revenues included our open enrollment in state equalization aid, the property tax levy, grant allocations, building and department fees, interest earnings, state transportation aid, Medicaid, categorical aid, rental income, and aidable refunds. Some of the changes in Fund 10 expenses were our open enrollment out expenses, grant allocations, building student count allocations, building and department fees, the 4K student count allocation. Human resources was changed for a licensure reimbursement that we're implementing this year. We also had district-wide expenditures, which included our cash flow borrowing expenses, business insurance increases, and private school voucher payments. We also had an increase to our transfer to Fund 27, and then salary and benefit accounts were updated based on our September actual staffing. For Fund 27, revenues changed by the transfer from Fund 10, state categorical aid, grant allocations, Medicaid was increased. Our expenses included grant allocations, salary and benefit updates, and a contracted service increase for a speech and language therapist. We had some changes in other funds, like Fund 21, we updated the athletic department expenses. In Fund 39, we increased the property tax levy per the budget committee's recommendation. In Fund 41, we added an expense budget for projects that crossed over from last fiscal year. In Fund 49, we updated the new Heritage Elementary expenditure budget. In Fund 73, we updated budgets to reflect the 22-23 retirees. And in Fund 80, we updated the Waunakee Community Cares Coalition grant. In Board Book, we have provided the full fourth draft of the budget as well as the budget adoption format as required by DPI. This is a comparison from July from the third draft of the budget compared to now in October for the fourth draft of the budget showing total expenditures. And then I'll turn it over to Steve to talk a little bit about the tax levy.
Thank you, Allie. I'm going to cover a couple of slides on the tax levy, and then Allie and I will be opening it up to any questions that any board members have this evening. I want to talk a little bit about the tax levy and how the information that we've included tonight is our best attempt to align the tax levy with the board's long-term goal of keeping the property taxes for existing property in the district as close to being as consistent as possible. So the information that has come in since the board approved the budget and the tax levy in July includes an estimate of the new construction across our community, So we're able to estimate that for our district. It's not perfect because that information is not released by school district boundaries. It's released by municipalities. So our estimate is about 3.2% of new construction across the Waunakee Community School District. We did learn that the equalized property values, which is a number set by the state of Wisconsin, increased by 16.8%. We also were able to complete the process of our 23-24 revenue limit worksheet. That is a state formula that has been approved for many years as a key part of the school finance formula. That determines our Fund 10 property tax levy. And then the last component is the state budget increase in the school property tax levy credit, which is a $1.9 million estimated increase in school property tax levy credits for our Waunakee Community School District. The levy changes between July and October are highlighted on this screen. The main change is in Fund 39, the Referendum Debt Service Fund. And again, the reason for that change is to get the Referendum Debt Service Fund closer to the actual expenditures that we have for the 23-24 school year and to align with the board's goal of consistency in the school property tax levy. Previously in July, when the board adopted that version of the budget, the third draft, we did not have information on the school property tax levy credits. So that's the information that was new between July and October. And as a result of that, we were able to increase the referendum debt service fund by the school property tax levy credit to keep that tax rate, or the taxes again, consistent. You want to go to the next slide? As far as our calculation of the overall tax levy between 22-23 and 23-24, in dollars, the increase would be $3,137,000. How we calculate that, again, to try to get as consistent as possible for the taxpayers, is there's an estimated $1.9 million increase in the school levy credit, and there's an estimated $1.23 million worth of school taxes that will be assigned to the net new construction or property that's taxed for the first time in 2024. So of the $3.1 million in additional school tax, it is basically being covered by those two changes, the school levy credit change, and the second one is the net new construction, the homes being taxed or businesses being taxed for the first time. The tax rate has to decrease in order for us to continue that tax rate consistency. And it's an important thing for board members to know that in the recent past, the board's goal was to keep the tax rate the same. So for about 3 or 4 years, we focused on keeping the tax rate the same. But last year, our district received a very large increase in equalized value. And if we didn't decrease the tax rate, there would have been a noticeable increase in the school property tax levy for all taxpayers. That same thing would happen this year. If we don't decrease the tax rate, our goal of having a consistent property tax levy would not end up that way because of the large increase in values. And the important thing to keep in mind, when values on an equalized value basis increase, there's really two things happening. Inflation on existing homes, and then the new property that's being added to the tax rolls. Our goal in this approach is to increase our levy on the new property, but we need to reduce the tax rate, because if we didn't, we would be taxing really the inflation or the increase in values on everyone's properties. So that's a pivot that we've had to make in the last couple of years to reduce the tax rate to achieve that ultimate goal of getting as close as we can to a consistent property tax. On a district-wide basis, that does result in a consistent school property tax levy increase from last year to this year. But one of the things that we always try to share with you as board members when we get to this point in the process, if you wouldn't mind going to the next slide, is we as a school district and ultimately the school board, you have the ability to target a district-wide tax rate and consistency, but in reality, it ends up getting broken down across all of our municipalities based on changes that are occurring in property values in each municipality. So if you see as an example the City of Madison line, even though I mentioned our goal is an overall tax levy consistency, the taxes levied in the City of Madison are dropping in actual dollars. That's because their portion of the district is shrinking. As the Village of Waunakee's portion is getting larger, as the Town of Westport portion is changing, and the City of Middleton, basically due to the new construction, there's a column that basically divides out our taxes according to each of our municipalities based on their property value. So changes are occurring amongst the municipalities that are causing the school tax shift to be different than an equal 8.1% for every municipality. So you can see on the screen it's a little different. The other thing to keep in mind is that we know that there was a large reassessment process that took place in the Village of Waunakee this past year. And it's important for taxpayers to note that depending on how their property turned out in that reassessment process, there could be shifts of the taxes within the Village of Waunakee as well. So what that means is, as an example, if you had like a 50% increase in your assessment on your home, you are significantly above the average assessment increase in the village. Taxes are being shifted to your property and away from homes who had an assessment below the average in the village. So there are taxation shifts that are occurring. All of those are completely out of the control of a local school board. What you have the ability to control is your attempt to get taxes as consistent as you can on a district-wide basis. But I do like to talk about just the reality of it is that each of the municipalities have something different happening there, and then within those municipalities could be further shifts based on things like reassessments. I want to go to the next page. So one of the things that we like to do is communicate to the best of our ability to taxpayers what's really going on in this complicated topic of school taxes. So we've taken a little snippet out of a communication that we've put on our district website and we've shared in the past, and Allie and I have already started working with Annie to get the communication ready for this year. So you see a little bit of what we try to get out to folks to really help them understand that property tax levy increases that are done have different things that can impact individual properties based on what's happening in that municipality, what's happening in that particular home. So we definitely do the best we can to try to communicate with our taxpayers as far as what might potential changes be. The most significant one that we all are aware of this year is really that large reassessment in the village, and depending on where someone's at, you can look at that very bottom bullet point that we've used in the past. Individual properties can have a tax value increase or decrease based on property changes. And then in parentheses it says like a basement remodel or a reassessment. So those things do happen every year, and it does cause shifts to occur as far as the school property tax. In board book, we have information that you're welcome to take a look at. We do have that tax levy filed by municipality, and then that tax levy explanation, which is part of our process to try to communicate this out to our taxpayers. What you see on this slide is summing up the information that Ally covered, which was on the left, and the information I covered, which is on the right. Those are our recommended approvals this evening. But at this point, we'd love to turn it back over to you, Joan, to lead any questions or conversations that board members would like to have.
Thank you, Ally and Steve. So I guess I would just open it up if anybody has any questions for the public to hear. No? If not, we do need approval. Do you want to put that slide back up, Rebecca, what we need to? So we need approval of those.
Do we have a specific motion that we have to say, or just approve these?
Is it a motion to approve the amount or the tax levy rate?
We would request a motion to approve the budgeted option, which is the amount of the $158 million, and then the total tax levy, which is the amount of the $41,692,918.
Do you have a
So the
specific
the budget's the left one and the levy's the right one, is what you're referring to.
Yep. Or someone could have a motion as presented on the screen would be fine as well.
motion is presented on the screen?
Second.
Any questions? All in favor, say aye.
Aye.
Opposed, say no. So you don't need the tax levy necessarily, just these two numbers?
Yep.
That's,
Okay.
you hit both of them.
Okay,
So,
great. Anything else for this portion of the meeting? If not, we will end this portion and ask the people not attending the closed part to leave, and then we'll make a motion to go into closed.
all right.
Thank you very much.